So welcome everyone to this revision session on India's 41, where we will try to revise the concepts and the questions of Lavidavi India's 41, right? A very easy India's. Let's try to revise this. Also, I will use some with the help of my board notes. If you want the board notes, if you are watching it on YouTube, you can download the board notes on my Telegram, right? If you have already enrolled for the lecture, you already have the notes and everything, right? Okay, perfect. And also, if you're watching on YouTube, do subscribe. Okay, anyways, chalo. Let's start the revision. Acha, this revision is going to be in 100% English for my lovey-dovey South Indian students. Okay, chalo. So let's start the revision in 3, 2, 1 and go. First of all, agriculture. So in agriculture, how many points are there? If we go to see, there are mainly 6 points to be discussed in agriculture, right? First point is scope, then definition, then recognition, then measurement, then gains and losses, then government grants, right? So first we will discuss definitions, okay? Because after discussing definition, we will understand scope. Now what is given in definitions? There are mainly 3 definitions which are given. One is a definition of biological asset. What is a biological asset? It is nothing but living plants and animals. These are biological assets. Acha, living plants can be bifurcated into 2 parts, bearer, non-bearer. Bearer means which have a life of more than 1 year. In case you remember, bearer plants are covered under Ind AS 16, right? Acha. What about non-bearer plants which have a life of less than 1 year? Covered under Ind AS 41. What about animals? Covered under Ind AS 41. Do remember that part. First thing. Second thing. Second definition was the definition of agriculture produce. What is agriculture produce? It is nothing but the harvested product of biological asset. Now what is the meaning of this? For example, whatever output you get from biological asset is agriculture produce. From cow you get milk. That milk is agriculture produce. From sugarcane plant you get sugarcane. Sugarcane is agriculture produce. From mango tree you get mango. It is agriculture produce. Do remember that. Acha, one more thing. When I discussed about mango tree has a life of more than 1 year. So it becomes a bearer plant. So it is covered under Ind AS 16. But the produce from mango is covered under Ind AS 41 only. Okay. Acha. Next point. In case of agriculture produce, all the agriculture produce has 2 stages. One at the point of harvest and then after the point of harvest. At the point of harvest means, for example, you remove milk from cow, right? So that cow currently is in the raw format. That is known as at the point of harvest, covered under Ind AS 41. But once the processing of that milk is done, once you add the water in it, once you add the chemicals in it, and once you add all this thing in it, and then it is ready for sale. Once it is ready for sale after processing, it is not after the point of harvest. Once it enters after the point of harvest, it becomes inventory. Okay, do remember that. Okay. Then the third definition is of agriculture activity. What is the meaning of agriculture activity? Whenever the process of removing agriculture produce from a biological asset, or the process of removing additional biological assets from a biological asset is known as agriculture activity. From example, from cow we get milk. So process of removing this is agriculture activity. From cow we also get calves, agriculture activity. From trees we grow fruits and vegetables, agriculture activity. Okay, okay sir, got it. So this was the first point, which was definition. Then the next point is scope. In scope we have 2 things. First, to whom does it apply? Second, to whom it does not apply. It applies to biological asset, but only those biological asset which are relating to agriculture activity. Do you remember I kept a dog outside my admission office? That dog is not involved in agriculture activity. So that dog is not a biological asset. So only those animals and plants which are involved in agriculture activity, those will be covered under Ind AS 41. Second, agriculture produce at the point of harvest is covered under 41. And if you receive any government grant for this biological asset or for this agriculture produce, if you receive any government grant for this biological asset or for this agriculture produce, it is covered under Ind AS 41. That means grant received for normal assets, PP, intangible or any other thing, covered under Ind AS 20. But government grant received for the assets of Ind AS 41 is also covered under Ind AS 41. Okay, chalo. Next. To whom it does not apply. It does not apply to land on which you conduct the agriculture activity, because that land is covered under Ind AS 16. It does not apply to intangibles used in agriculture activity, because that is covered under Ind AS 38. It does not apply to agriculture produce after the point of harvest. Sir, why? Because as soon as it becomes after the point of harvest, it enters Ind AS to inventory. It does not apply to bearer plants. We already discussed this. But of course, it applies to the produce from the bearer plant. Also, it does not apply to government grant on that bearer plants, because if bearer plants are not covered in Ind AS 41, even the government grant on that bearer plant will not be covered under Ind AS 41, it will be covered under Ind AS 20, right? So these were the first 2 points. Third point, recognition criteria. When will you record any biological asset or agriculture produce? See, can I say broadly in Ind AS 41, 2 types of asset are covered. One is biological asset, one is agriculture produce broadly. Of course, if you go in detail, in biological asset, only other than bearer plants are covered. In agriculture produce, up to the point of harvest is covered. But broadly, these 2 items are covered. So when will you recognize these 2 items in your financial statements? 3 conditions to be met. First, you should have control. Second, there should be future economic benefits. And third, fair value or cost should be measurable reliably. Next point, measurement. How will you measure the biological asset and agriculture produce? Listen to me carefully. Initial and subsequent measurement is the same, okay? For biological asset, you will measure at FVLCTS. What is FVLCTS? Fair value less cost to sale. One exception is available. If FVLCTS is not available, you can use cost model. Okay. For agriculture produce, at the point of harvest, you will also use FVLCTS. Sir, what if FVLCTS is not available here? That cannot be the case. Standard says that for agriculture produce, you will surely have the FVLCTS. So you cannot say that for agriculture produce, FVLCTS will not be available. So there is no exception available here. Like we had an exception here, such exception not available here. So by default for agriculture produce, you will have to calculate FVLCTS. Okay, okay, sir. Acha, one more thing. You know, agriculture produce at the point of harvest is covered under Ind AS 41. And after the point of harvest is covered under Ind AS 2. So as soon as your agriculture produce goes from Ind AS 41 to Ind AS 2, let's say for example it goes on 15 September from Ind AS 41 to Ind AS 2, at what value will this get transferred? So whatever is the value on 15 September in Ind AS 41, in Ind AS 41 we keep at FVLCTS. So whatever is the 15 September's FVLCTS of Ind AS 41 will become the cost for Ind AS 2. So do remember that. It is given in the second point here. Okay. Now the point is, when we say we have to record at FVLCTS, how do we do this calculation? I already told you this is the most important calculation. So giving you some examples, please listen to me carefully. Let's say for example, you purchase 100 cows for 500 rupees. Selling cost is 1000. Right? So what entry will pass? You will say biological asset purchased account debit to cash bank. In cash bank, whatever you paid will come. But when you debit biological asset, you will record this at FVLCTS. Now, when I say FVLCTS, you will not take only 50,000. This 50,000 will come, but you will also deduct the selling cost. See, selling cost you will not incur today, but still you will deduct it because we have to record at FVLCTS. So it will get recorded at 49,000. Whatever is the difference will get transferred to profit and loss. Acha, there was example number 2, where there was purchase cost also, selling cost also. If there is any purchase cost, it will get added to cash bank because you paid to purchase the cows also and you incur the purchasing cost also, right? So it will get added to cash bank. But when you remove the FVLCTS, do not consider the purchase cost. You will only take this fair value and less the selling cost. It is done here. Okay, so I gave you one hint for this. This is a Farvidhic exclusive hint. What is it? If you have any purchase cost in the question, you will add it to cash bank. If you have any selling cost in the question, you will less it from fair value. If there is any cost which is incurred by the seller and the purchaser both, in that case, that purchase cost will also get added to cash bank and that cost will also get deducted from the fair value. Okay, and whatever the difference is, it will get transferred to profit and loss. Please do practice these measurement questions. Okay, I gave you the examples also. Anyways, then there are some other important points which are also given. What are the other important points? In this, only the second B point is very important. Okay, but I will discuss whatever critical is there. It is given that can grouping of biological assets or agriculture produce be done to facilitate fair value measurement? That means, can you group a biological asset and agriculture produce to find the fair value? Yes, you can. Second, what are the reasons due to which FVLCTS of biological asset changes? It can change due to 2 reasons. One is physical change, one is price change. I give you example also. Let's say Ajay was 3 years old. He had a value of 15,000. Next year, he will become 1 year older. His age will be 4 years now. His value is 22,000. So his value increased by how much? 7,000. Now the reason for this increase can be 2. Physical change and price change. How to calculate this? For this also we discussed one example. Let me show this to you. Wait, here it is. Reason for change in FVLCTS of biological asset. Let's say for example we have a 2-year-old cow of 900 rupees in 11. So we recorded it in 900. Now next year it became 3-year-old. The value is 1200. So next year the value became 1,20,000. So from 90 it became 1,20,000. Increase by 30,000. How will you book the increase? That is the question. So this increase is because of two reasons. One is physical change, one is price change. How to calculate the physical change? To calculate the physical change, stand on current year and compare age-wise value. On this date itself, 2-year-old cow is 950. On this day itself, 3-year-old cow is 1200. That means if you are standing on the same day, 1 year older cow is little expensive. This is the physical change, right? So for physical change, I compared 950 and 1200, right? What about price change? Either take the balancing figure, or you can also say for price change, you will compare year on year. Compare year on year. 2-year-old cow in 11 was 900 rupees. 2-year-old cow in 12 is 950 rupees. Year on year change without change in life, without change in the age, year on year change. This is price change. Of course, do practice it. I'm just focusing on revising the things. Okay, done, sir. Then the next point was, this was the reasons due to which it can change. Next, can contract price be relevant in measuring the fair value? The answer is no. Why? Because contract price is the future price. If you fix a contract that I will sell you milk after 6 months at a certain price, this is future price. Future price cannot be considered as today's fair value. Okay. Next point, can cost be considered as approximation of fair value? The answer is yes, only when from the date of purchase, not more time has lapsed. For example, can I say on day one, cost and fair value are the same? Cost and fair value are the same on day one. But if I say I bought something on 2011 for 10,000, and if I ask you, will that 10,000 can be considered as the fair value of 2014? The answer is no. Something you bought for 10,000 in 2011 cannot be considered as the fair value of 2014, right? Because a lot of transformation must have taken place now by now. But if I ask you, I purchased something in 11. So what is the fair value of that particular item in 2011? It will be the same like cost only, right? So it is said that, can cost be considered approximation of fair value? The answer is yes, only when little transformation has taken place. Only little period has lapsed, or impact on transformation is on price is not expected to be material. That means the price does not change year on year. In that case, you can consider it. Anyways. Next point. What will be the fair value of biological asset attached to land when no separate market exists for such biological asset? For this, I give you example. Let's say I have a land on which I have many biological asset. So I have the combined value of this 10 lakhs, and I have the value of only land 7 lakhs. So if I ask you what is the value of only biological asset, can you take it as a balancing figure? 3 lakhs, simple. Achha, next point. Whatever gains losses you get on biological asset and agriculture produce, those gain losses are always transferred to profit and loss. Initially you might gain, subsequently also you might get the changes. Initially also, whatever loss or gain you get, profit and loss, you were transferring difference. On year end also, when you remeasure a biological asset on FEL CTS, that difference will also be transferred to profit and loss. This government grant point I will revise later on. Okay. Then we can move on towards certain questions which I feel are important for you to revise. Basic questions, of course, you can try at your own. First, illustration number 4 was there. It is a very good question. What is there in this? So basically, balance sheet extracts were asked from you and profit and loss extract were asked from you on the year end. So evaluate one by one. They say we have a land of 50 lakhs. And in the question itself, they have mentioned that land is to be measured at cost method. So the value of land on day 1 is 50 lakhs. Can I say on year end it won't change? So on year end also, you will keep the land at what value? You will keep the land at 50 lakhs only. And there will be no impact on profit and loss since it is not getting depreciated. It is land. Acha. Then we purchased 200 cows for 10 lakhs. So this is the value on day 1. They were 2 years old. Can I say, if you want to pass the entry on day 1, you will pass the entry something like this. There is no cost to sell given. So we pass the entry like this. But I want the value on year end. So to calculate the value on year end, you will have to come in this table. If they were 2 years old previously, now can I say they become 3 years old? And on year end, their value will be 5,500, right? So from 10 lakhs, their value became 11 lakhs. So whatever the increase is there, you will book in profit and loss. So what will be the impact on balance sheet? You had a biological sort of 10 lakhs increased by 1 lakh. So you will record in balance sheet at 11 lakhs. And for gain, you will record only 1 lakh gain, right? Simple. Achha. Then what did we have? We had, we received a grant, which was unconditional, non-refundable. Grant point we did not revise, but let me tell you, whatever grant you get, if it is unconditional, you will book immediately in profit and loss. So we booked in profit and loss. Then we incurred certain expenditure, book in profit and loss. Then 100 new calves were born. Do remember, whenever a calf is born, it is fully a gain for you because you did not incur any cost in it, right? So whatever calves were born, it is a gain for you. So value is given as 1100, we booked it. And on year end, they will become 6 months old. Check their revised value as well, and whatever increases there, book it. So the increase was of 20,000. So initially they were of 1,10,000, then they increased by 20,000. So total they will become 1,30,000, record it. And because they were newborn, free for you, record the full value as gain. Okay. Apart from it, we also had some milk. Milk is again, you are removing it from cow, it is free for you, so it will be shown under inventory and full amount will be a gain for you as well. Okay, so this was a good question which we did. That is illustration number 4. Apart from this, we also basic questions you can revise on your own, and don't leave them, at least revise them. Okay, I am just revising those questions which are good from exam point of view. Okay, the next question which we will revise is illustration number 6. What do we have in this? See, it says that initially we had 500 cows which are 3 years old. We already had it, we are not purchasing it, we had in opening stock. So 500 cows were there which were 3 years old. Value, how to find this? See, on 1st April we had 3-year-old cows for 500, right? So the fair value is 27,000, 3-year-old cow, and cost to sell is 1,000. So what is the FVL CTS of these cows? If you want to see, it is 500 into 26,000, 130 lakhs basically. Now what happened is, on 30th September, 20 cows died. So when a cow dies, it is a loss for you. And whenever it is a loss for you, the cows will be derecognized. And at what value will it get derecognized? It will get derecognized at carrying amount. How to find it? You can cross multiply and find. If 500 cows value is 130, what is the carrying amount of 20 cows? You will get 520. Because it died, it is a loss for you. Book it. Profit and loss to biological asset. Okay, so how many cows remain now? 480 cows remain. Now what they did was, they bought additional 20 cows which were 1 year old. Because 20 cows died, they bought new 20 cows 1 year old. So record them now. What is the value? So they bought for 21,000. They bought for 21,000, but you have to record at FVL CTS. You can check the FVL CTS below. 1 year old on 1st October. 21,000 is the fair value, but cost to sell is 1,000. So FVL CTS is 20,000. So when you pass the entry, you can record like this. Prepare a table. 20 cows, FVL CTS 20,000, total 4 lakhs. So when you pass the entry, you will clearly say that how much did I pay? I paid 4 lakh 20. But at what value will I record? 4 lakh. Difference 20,000 profit and loss. Then you have milk also. For milk only the amount was asked. So 1,000 liters of milk. 19 is the net value because 20 is selling price, 1 rupee selling cost. At 19 you will show it. Apart from this, what is to be shown? These cows which you have in your stock, you will also have to remeasure on year end. So this 480 cows, when you remeasured, you get a loss. Of course, you can remeasure it easily. And because they were 3 years old, check the value of 4 year old after 1 year. These new cows which you bought, they were 1 year old. So after you bought on 1st October. So check the value after 6 months. They will be 1.5 years old. There is a gain here. How can I find the value? Let's say you want to find the value of 4-year cow. So 4-year cow, year end value, 26,500. Deduct 1,100, you will get 25,400 value. Right? So you can measure now. Previously it was this much, now it is this much. So decrease. Similarly for this, 20 new cows. So go into 1.5 year column, 23,500 is the current year end fair value, but deduct the cost to sale. So 22,400 will come. So this is the new FVL CTS. Old it was 4 lakh, now it is 4 lakh 48. Increase. So book the increase. So if it is decrease, you will book the decrease, PNL to biological asset. If it is an increase, book the increase, biological asset to PNL. Okay. So this is question number 6 we just did. Okay. Perfect. Chalo, remaining question also we will revise in continuation. Perfect. Okay guys, so we revised illustration number 6. Now what we can do is we can revise this government grant point which I had left. Okay, in between. So what is there in this government grant? See, in Ind AS 41, in case you remember, I told you, the assets which are covered under Ind AS 41, its government grant is also covered under Ind AS 41. So sir, which asset are covered under Ind AS 41? In case you can see, in Ind AS 41, 2 types of assets are covered. First is agriculture produce at the point of harvest. Second is biological asset other than bearer plants. These are the 2 assets which are covered under Ind AS 41. So its government grant is also covered under Ind AS 41. Now remember one thing what the standard says. Standard says normally we do not receive any grant for agriculture produce. So no discussion is done for this. Acha. So it says we normally receive grant only for biological asset. So if you receive any grant for biological asset, first check which model have you used. Do you remember in biological asset, if you did not have FELCTS, you had the option of using cost model. So if your biological asset is at cost model, you will follow Ind AS 20 only. But if your biological asset is at FELCTS, in that case you will come under Ind AS 41 and check whether that grant is unconditional or conditional. If that grant is unconditional, you will transfer the full grant in profit and loss on day one. But if the grant is conditional, you will book the grant directly after the conditions are met. That is, for example, if you had the condition of 5 years, you will book the grant in profit and loss directly after 5 years. Do not book it over the period of 5 years. You will book it after 5 years. That is, after the conditions are met. Okay, one exception is there. The exception does not have any impact on the questions, but it is still there. I will discuss it. What does it say? It says that if you get any conditional grant, just check the refund criteria also. If refund is to be done fully, if full refund is done, then this is proper. Okay, you will have to book the grant also fully after the conditions are met. But sometimes what happens is refund is to be done partially. In that case, you can book the grant over the period of 5 years. Not going into the depth of this because not very relevant from question point of view. Okay, Acha. To discuss this, we did one question also, that was question number 1 of MTP RTP past exam, in case you remember. Okay, and that was, it says that we have a plantation tree for which we got a grant of 20 lakhs. Now what the company did was, company booked the grant over the period of 5 years. Is it correct? So ideally, if you are getting a grant for a biological asset, that is a tree, if it is valued at FELCTS, then the method followed by the company is incorrect, because if it is FELCTS, it becomes a conditional grant. It is said that it is a conditional grant. If it is measured at FELCTS and if it is a conditional grant, you will book the grant in profit and loss over the period of 5 years, right? So the treatment by the company is incorrect. But while answering, you do not have to answer only from this point of view. You will answer from each and every aspect. It was not mentioned that whether this tree was being measured at FELCTS or cost model. So also answer that if it was measured at cost model, then they have to follow Ind AS 20. Then as per Ind AS 20, their accounting is correct. Also, one more thing can be there. They did not mention that whether this tree was a bearer plant or a non-bearer plant. If it was a bearer plant, then its government grant was covered under Ind AS 20, and then also the treatment by the company is correct. So just revise that question as well. So this was the point of government grant. Now also let's revise the remaining questions which are pending. I revised till 6th question. Now 7th question is also a very good question, an LDR question. Please have a look what is to be done. But a simple question. It says we got 100 goats. Okay, where we incurred some transportation cost. Now whenever it says transportation cost similar to the cost S would have to incur, I gave you a hint. Whenever they are using the word similar, that means this is a buying cost as well as the selling cost. So whenever it is a buyer's cost, you will add to cash bank. Whenever it is a seller's cost, you will reduce from fair value to compute FELCTS. Remember my FR with this AK exclusive hint? Okay, sir. And there is a 2% selling fees incurred by the seller also. So what to do? On first day, we will record the entry biological asset to cash bank. This is the amount of cash bank. This is the amount of FELCTS. Just record it. Also prepare a table below that for 100 goats we recorded at 97,000. Then it is said that then on year end FELCTS is given. Simple. So just remeasure it. So when we remeasure, we get this value. Whatever increases there, book in your books of accounts. Then what happened? We sold 18 goats. Okay, for some consideration. So now what is to be done? So for selling, just remember, whenever you sell, the biological asset will be removed out of your books and you will record the consideration. So debit cash bank, credit biological asset. Whenever you are removing anything, remove at carrying amount. So those 18 goats which are sold will go out at carrying amount. How to remove the carrying amount? So we will just cross multiply and find the carrying amount. We will get it. Whatever consideration you received, just record it, difference transfer to P&L. Just to highlight, IC, I am giving you a net entry. ICI passes a gross entry. So it is better if you follow ICI's entry also. But to understand this entry is better. Anyways, let's proceed. Then what happened? On 15 September, some goats were slaughtered and converted into carcass. Okay. So this basically implies that your biological asset will get removed and you will record an inventory because your goat is getting converted into some meat. Right. So biological asset will be removed and you will record inventory. Now, because this is going out, this will go out at carrying amount. How to remove the carrying amount? Again, cross multiply and remove na baba. Simple. Okay. at what value do we record the inventory? In case you remember, the provisions of Ind AS 41 says that whenever any item of 41 becomes an inventory, the FVL on that date becomes the cost of inventory. What is the FVL on 15 September? It is given in the question. So we recorded that value. Difference transfer to profit and loss. Also, there was some slaughtering cost incurred, transfer to profit and loss. Then on year end, fair value information was given. Just remeasure and find the fair value gain loss. Simple. This was illustration number 7. Illustration number 8, you should try in homework. It is a good question. Matlab, just try it, okay? Anyways, then we can come to one we discussed. 2 also, you can just give it a read. I explained this, okay? It is asking about whether it is agriculture activity or not, right? So, I'll discuss that. In contract number 1, in case you remember, I'll tell you what was happening. In contract number 1, there were 2 parties, okay? One was ABC Limited, one was the farm owner, right? We have been asked from the point of view of ABC Limited whether ABC is doing agriculture activity or not. So let's say in contract number 1, the farm owner was growing the apples and selling the apples to ABC, with which ABC used to prepare juice. Okay, here ABC is not doing agriculture activity. Here ABC is just buying the apples. So contract number 1 is not agriculture activity for ABC. But in contract number 2, the farm owner gave the farm to ABC. Now ABC himself grows and cultivates the apple and then uses the apple to prepare the juice. Here ABC himself is cultivating the apple on the farm. So for ABC, it is agriculture activity in contract number 2. Just give it a read, you will understand everything. Then there was question number 3, a very good question to calculate that physical change and price change. Okay, what is to be done here? I will just give an overview of this. So first we bought 4-year-old cows. So how to solve this, sir? Just follow a simple procedure, solve it one by one. You had 4-year-old cows, this was the opening value. Okay, after 1 year, can I say it will become 5 years old? Find the closing value, you will get the total increase decrease. Now how to find the physical change, how to find the price change? Please remember, in physical change, stand at year end only and compare age wise. If this was 4 years old on year end, what would have been the value? And now if this is 5 years old on year end, what is the value? That means in physical change, you don't change the year, you stand at specific date and compare the age wise value. If this was 4 years old, how much? If this was 5 years old, how much? That is why I will get the physical change. Price change due to age, right? That is why. Okay. And how do you calculate the price change? In price change, don't change the age. Just compare year on year. If in previous year, 4-year-old cow was this much, how much is 4-year-old cow today? So we check year on year in price change. So this will require practice. Do practice it without me, without my revision, with just by sitting alone, so that you will come to know whether how we are making mistakes in this. Okay, so physical change, price change, I calculated for the 4-year-old cows also. Then we purchased a new cow, same, find the total increase, then find the physical price change also. And for the new calf also, in new calf, one point is important. Whenever new calf is born, so whatever the value is on day 1, that full value is gained for you. That full value you will have to allot in physical change only. Okay, then of course whatever is the increase on year end as well, allot into physical and price change. So I just gave a summary of total physical changes in all the 3 cases and total price changes in all the 3 cases. Okay, then one more thing was asked, closing value of herd. How do I get the closing value of herd? I had already computed it. 15 cows, closing value is this much. The new cow purchase, closing value is this much. The newborn calf, closing value is this much. So just compile them all together, you will get the closing value. And also one more thing was asked, which was the livestock account for the year ended 31st March 22. How do I prepare the livestock account? It is very similar to trading account. How do you prepare it? Just write the opening stock. Opening stock means you had 15 cows in the opening stage, right? Record the 15 cows at opening value. Okay, then whatever you purchased, you will record. You purchased only 1 cow. What about the newborn calf? Newborn calf won't appear separately. It will appear in the balancing figure anyways. So whatever you purchased, you record it. Then record the closing stock. How do you get the closing stock? In part 2nd, we found the closing stock only. The difference in trading account, normally we get the difference as gross profit. Here you will call the difference as increase in fair value. Simple, right? Of course, this is 1380. The increase is of course due to 2 reasons, physical and price change. This will tally with your answer number 1. Okay, so this is how we complete the revision of Ind AS 41. Of course, do remember in the questions part specifically in all the chapters, whenever I'm revising the question, revision is not a replacement of writing practice. Do write and practice, because when you revise with me, you will feel that I understood, sir. But when you start solving it by your hand alone, you will start making some silly mistakes. That is very important to know when you're doing at home. Okay, so do practice it. Of course, in case you like the session, do share it with your friends. Also, if you want these notes, board notes with the solution which I make you write in the class, I will upload it on Telegram. You can download it. Okay, if you are the class student, then you already have it. Well and good. Okay, so I hope you liked it. Do leave a comment in case you liked it. Thank you so much, everyone. Bye bye, everyone. Take care. See you all. Bye.